Hello, hello. It's time for an intraday lesson on the SPX master server for everyone that's here because we have some very good SPX trades today and it's time to explain them. All right. All right. So let me see. Are you guys looking at my screen? It's just you. This is you, Kemas Parse, but um, everybody's welcome to watch this. So we can see what happened today and where could we represent what I see, how I use my Fibo retracement tool. Because we have videos about it, but I guess intraday it's good to show. And the way I see things are a little bit quite simple, quite simple. By the way, my computer got super slow with the recording software, but I'll try my best. So right here, I like to use the 5 minute candles. I know Alfonso uses a lot of the 10 minutes. Does not go below 10 minutes, but I like to see 5 minutes because it gives me a little bit of perspective where the downtrend and uptrend starts and ends before a 10-minute candle closes. So trying to ignore a little bit of what happened overnight because this is where the day starts. Uh, you have to kind of pick a side, right? Pick a side. Where are we in relation to the prior day and all this stuff, and then get a narrative. We could go up or down from the open and try to go from there, right? Because I like right off the bat trying to. Sometimes the Fibo works perfectly, but sometimes you just have to wait for the day to develop more. It is what it is, right? Today I waited for the day to develop more because I felt like the day was gonna be bearish, but I needed to see how far the market was gonna go up for me to start shorting it, right? One of the key points that I had in mind today was that the on the daily candles, we were trading below the 20 moving average, and usually you'll see a lot of candles having a wick to the top of it and then rejection. So that's what I was looking for. But I actually hesitated because I could have short that and basically have puts from the top of the day, right? But the lesson right now is going to be about Fibo retracement. Um, so I can tell you there's one right now. There's one at the open, right? So we have a green candle right here. Then we have a rejection of a trend line of the pre-market. That was actually very shortable. You shorted this, you made very good money off of that. But then we started rebounding, right? You can actually see that there was a divergence off of this low and this low. If you notice right here on our side, and then we push forward. So everything's going in plan, right? Very good setups. Rejection of the trend line of the pre-market, divergence at the lows, long side, and then you start using your Fibo retracements. So on the long side, you could have caught this because this is the start of the uptrend, right? You see these green candles, and then you top right here. This is where you top the you start printing this red candle, so it means that the with a lower high, so it means that the uptrend has finished, and what you look for is a retracement, right? So from there, uh, you draw your Fibos, like I said, from low to highs, and then you're gonna see roughly. I use the 20 EMA on the 5 minutes a lot, and if you see the lows of that candle is the 20 and the 50% retracement, you risk come on the long side on that, and then you'll see the upside, right? Main targets are usually the 0% of the move or the 10% of the move, and if it goes higher, you just go from there, right? And remember, we're looking at the daily 20 EMA at the high, so we know that it is right here. Uh, Next up, if you want to keep playing the long side, you're gonna have to take this Fibo and this Fibo, and you're gonna long one of these retracements right here, which this one would have worked, even though it went a little deeper and for a little bit of upside. But at that moment, myself, I'm looking for shorts because I know the daily 20 is right here, and the daily 20 has rejected us down. So when I see something that trades a little bit below the 618, like because this is the bull retracement, right? This is the leg up. It pulls back down and it traded. It should have bounced right here at the 618, but it traded below. So it means that more than one third of the longs of this move are wrong, and they'll be looking to be sellers later, right? So what do you do instead now is flip your Fibo retracement, because this is a one from lows to highs into a bull retracement, but now I'm looking to short, right? So what you do is basically anchor from the highs to the bottom of that move, right? Because this is the start of the downtrend, and then it makes this candle is the uptrend, right? So as it's coming up, you have to take a decision, right? Short the 50, short the 618, or somewhere, right? You short the 618, which is like I always say, the best risk reward. It offers a nice entry for the short side, and what you see is a nice leg down, right? So I took some puts right here. Like I said, I saw that we traded more than the 618 on the bull side, meaning that there's uh, trap longs, and then we I take a fewer retracement on the bear side right here. We start having, like I said, always a 0% is a target, then the 10%, and then the 50% is a target. And if it continues to go down, even better. But at that, like I said, it's all about position management at that point. The entry has been given and the target has been given right there. So you keep just doing that, right? You see the new downtrend started right here and ended right here, because this is the low of the where the downtrend stopped, right? So what it does is trace up to the 618, very close to the 618 and the 50%. You enter some puts right here and boom, back down, right? All the way to the next target. So the 0, the 10, and the 50. Boom. So what do you do when this ends? So you have this leg down, and what do you do if you have a candle that makes a higher low right here? So you anchor it again. This is a small retracements, guys. This is a small retracements where the market is still playing out like that, right? So what it does is trace up into a 618 and it starts rejecting. I did enter right here, around right here actually, a 50, but the chop killed the contract by a lot, so it did not give a lot of the all the gains that expected right here. But if you notice, we hit the 10% of the move and no more, right? So like I said, and this is a when you have this much chop right here, you look to move into like the 15-minute candle so you can see better, right? Because on the 15-minute candle, it just doesn't look that much sharp, right? It looks like we're hitting 618 rejection, 618 rejection, rejection until it breaks down into 10% of the move. Now, shorting, when you hit that 10% of the move exactly like that and you bounce off of exactly like that, it's a lot of times it just reverses. It just reverses, right? That's why a lot of people short like, oh, it broke a new low. Let me short because we're gonna continue lower. No, it's just gonna be that little bitty low, that 10% of the move, and it goes like that. Now you notice that the 20 EMA on the 15-minute is being rejection right here. There could be rejection right here too. So this could be a short entry. Where would I anchor this right now? Uh, Now, on the 5-minute perspective that I have right here on small retracements, I see that this leg down should have rejected right here, but it didn't. It went up. So we have what you would call trap shorts right there, meaning that you could actually take a bull retracement from year to year, right? You could start shorting right here, given that it's a 15-minute 20 EMA that was rejection earlier right here, or and into one of those targets that will be a bullish retracement, or wait for one of these points to take it to the upside. And this you will combine it with other tools, right? I don't just go on retracements willy-nilly. I uh, I have my internals, and I have to take a look at if ADD, the tick, the ADSPD, the bold are just going in sync to the downside or to the upside, if they're showing signs of reversal or not. And at the moment, I'll tell you right now, we're very flat. Looking at the zero on the ADD, and we're trading below. It's below the ADSPD or below the zero line, so that's bearish. The tick did not reach past a 600 point on the upside, so that was not a very bullish short squeeze action move. And we're still looking at some downtrends, but the ticks are not strong to the downside either. So very neutral at the moment, very neutral. But like I said, if you join right here, you're probably gonna see the ticks increasingly go to the downside once it goes down like that. Um, And on the daily, hourly perspective or so, we're probably we have some long wicks right here. We have yeah, I don't see much. We're trying below the prior gap that we had that it ended up filling, and this is a good area to take it to. It's a supply area. That's the issue. That if you look at, I'm sorry, at demand area. If you look at the past right here, this is all a demand area between these 2 points right here. So not a lot of direction. Main targets for the downside on the daily has been hit, but internals are pointing more downside than upside. So the edge is probably to the downside at this moment. And I will just probably wait for a better setup than this. This doesn't look like a good setup right at the moment. And you will be convinced to the downside if it trades below the 618 off of this move, right? If you take this lows to this highs, because this will be the place where the bulls will take it to the upside for some bull flag right there. And that's it. That's it on the Fibo. We'll see what the day leaves, and we'll go from there.